Good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, February 21st. Mike Boutros with you on the mic. Hey, Peter, great to see you. Robert J. Ya says I took a short at 27. I like the Sterling, the SPX pullback. In fact, Pete, I was thinking about you this morning. The near-term slope that we drew yesterday. Not to segue real quick. You see that? A really nice response, right? So don't get too overzealous on it, but the first initial pullback definitely looks good. We'll come back to this later in the session, but good luck on that move. Good morning to everyone in the room. Welcome to this final webinar of the week. Looking at some price action, we did get some developments in overnight trade with trade tensions. Well, I guess geopolitical tensions more so between China and Australia. You might have seen that there has been a big move in the Aussie, even though the data was pretty decent last night. We saw a big move there. Essentially, what's going on is, China has closed off a port to Australia coal miners indefinitely at this period, and this is just kind of escalating, tensions between the nations. We're going to see how that materializes. Definitely hitting the Aussie today, so we'll go over that. DXY. From last night's update, we'll go over, first thing, we'll start off with Aussie, then we'll hit dollar yen. Not really a big fan of the yen, but guys, the price action is actually pretty clean. And I do want to hit on crude as well. We'll circle back, hit euro, CAD, and gold. And then we'll wrap it up with the previous update there on Kiwi dollar. Let me know if you guys have any other questions or trade setups you want to review. And we will jump right in. Here's what DXY looks like to start off the session. So in and of itself, the slope has continued to hold pretty good. It's still holding this channel. Just a quick reminder of what we looked at the DXY earlier in the week. We were sitting on this support right at 96.69. Downside break below 96 is really what we want to see to start the move. You saw 96.45 tag yesterday, and basically we're approaching that 50. We turned just ahead of it yesterday. That's the daily chart. Here's the intraday. Okay, we turned just ahead of it yesterday. I still think you get the tag. Okay, that's the 50%, 96.27. Right around that region at this point, guys, you're looking at slope. So the exact pitchfork that we've been working with, recall that the 618, if I'm not mistaken, the 618 of that slope caught resistance. Again, a raised ceiling here, turn right ahead of it. The underbelly of that slope converges essentially on that 96.27 mark. So keep that in mind as near-term support there for the index. At this point, resistance, I would drop down to 96.70. Okay, drop this. Resistance at 96.70. I would still put near-term bearish invalidation at 96.81. So as long as we stay below the weekly open, even if it intraday spikes, you did get, well, actually, we're pretty limited as far as event risk for the end of the week, but a topside spike, even as high as 96.81, I think would be okay for keeping the downside. This is really the focus. If we get through this, the 618 comes in right at 96, and that's right on the channel support or the lower parallel, basically into the close of the week. So the levels are pretty clear. Bearish sub 96.70, bearish invalidation 96.80, downside targets 96.27, and the 96 handle. Finally logged in after 5 attempts. Oh, sorry, Pooja. Were you having problems logging in? Anyone having issues? Do let me know, guys, if you guys have any issues logging on. Robert says it's good over here. All right, cool. So any questions on the DXY? There's really not much to update. It's just been a slow grind. The same levels remain. I'd rather be bearish. If you're not holding a short position, guys, I still would caution you on doing anything from these levels, okay? Just because you're already trading pretty darn close to not only the weekly range lows, but also support. So it's not worth it for you to jump into anything if you're not holding shorts just yet. Look for a reaction here. If we get some sort of recovery, you might get another opportunity, but the focus right now is for this drop. See if we can't get that extension near the 50. And interesting, I've left this trigger on just because I've been watching it for a while. Remember, I always like to take the trigger off the high in price. So when we failed here, there was a new high registered. If you move this trigger, it basically keeps us essentially still in there. So even if you get some sort of recovery, momentum profile still looks pretty bearish. Here's the daily chart. Okay, today's focus on the daily chart is an attempt to close below that 100-day moving average, basically what we're testing right now. Okay, on the weekly chart, heading into the close of the week, I don't even have my weekly charts open. Okay, here's what we look like. If it was going to turn, when you look at this chart and you kind of sit back and laugh because all the noise that we heard into the start of the month and this massive rally in the dollar, and oh my goodness, it's still holding ridiculous slope. I'll bring your attention to the 2011 slope support. We've all seen this here before. Okay, those parallels, support, resistance, resistance, resistance. We had highlighted this region. Former slope support, could be resistance. Basic trendline support off the highs from 2017. Looks like we just made a tag and pulled off. This is not verification. This is not like, okay, it's a short, blind short, no. But if it's going to materialize, this is the region of resistance that we talked about that needs to hold. So we don't want to doubt it too much. All things held constant, we're looking for that close below the 100-day moving average today. We're looking for that push lower towards 96.27 to look for a reaction in price down there. Aussie on your list? Pooja sure is. Yep. First one after this, okay? All right. That's DXY. Going once, going twice. Sold. Number two. Here's Aussie, Pooja. How many people trade DXY? Kieran, good question. I don't know. How many of you guys are actually actively trading DXY? If you're trading on futures or you're trading with any of the major brokerages, you do have access to that index. Kieran, whether you trade it or not, or at least for myself, I tend to follow DXY exceptionally closely. It's obviously 60% weighted the euro, so oftentimes more than not, it'll be the inverse of euro dollar. But more so, it gives you a kind of a picture of what the base dollar move is doing. So for me, it's kind of a gauge I like to watch first thing in the morning, just to put my mind on what the dollar in and of itself is doing. Obviously, the implications for the euro, like I said, are heavier, but it's not necessarily always have to be a tradable asset to follow the price action. Here's Aussie. So Pooja, were you in earlier when I was talking about what happened? He says, yes, just for watching and as a gauge, as you say. Yeah, Kieran, you got it. So I don't know if you were here earlier, Pooja. I was just talking about the news that we got in overnight. Basically, like I said, China closed the port of Dilian. It's basically banned all imports of Australian coal indefinitely for this time period. And that has continued to stress the relationship that's deteriorating between China and Australia. It has to do with cybersecurity and decision by Australia to kind of revoke visas for some Chinese businessmen. That ongoing political drama has kind of been mounting, and the closure of this port and coal, which is one of the major exports for Australia and one of the largest imports for China from Australia, certainly took a hit to the Aussie. So interestingly enough, the data yesterday was actually pretty decent. The Australia data that we had noted, here's Aussie dollar on the daily chart, or on the intraday chart. Pooch says, okay, oh, I thought it was the employment data. No, the employment data was actually pretty decent, okay? Bear with me one sec. So Aussie employment actually came in at 15,000, I'm sorry, 31.9 thousand. They were looking for a print of 15. Unemployment held at 5%. Full-time employment gained 65.4 thousand after a previous contraction of 9,000. You saw part-time employment contract, but again, the build in long-time or full-time employment, long-time, is stronger. And the other thing, the major takeaway I took from the data last night with Australia was the participation rate jumping from 65.6 to 65.67. Small uptick, but again, increase in the participation rate while unemployment holds is typically a good thing. That's a feed or an increase in capacity for the labor market. So certainly the data was not the foul here. And in fact, Pooja, the data fueled the move into our last resistance target, which was 72. Here's the intraday chart. Here's what we looked like yesterday ahead of the release. Okay, where's Aussie? Here we go. So the focus, and I was telling you guys this in the report, is all about 72. Look for a bigger reaction there. That's what we needed to clear to validate the breakout. It's a 6.8 retracement in price, but like I always tell you, a fib in and of itself, we don't want to like throw all our eggs on that basket. Look in and of itself objectively in price. Clear price pivot, resistance, break, fueled acceleration. On the way down is the first area of support. And when we broke it, again, price accelerated. That same level converged on the 75% line of the slope. Why the 75% line? Very simple. The 75% line is what caught support. So you look for that symmetry in price. And that's why we stressed 72 as a region of resistance. That's the level we need to clear to get the breakout trade in Aussie. Well, you got the release of the data. It ripped higher. Here's the rally right into that level. It cleared into like 72.06 before massive failure. And again, once those headlines start to hit, once you broke the median line, our bearish invalidation was 71.15. Our bullish invalidation, excuse me, was 71.15. Below that here, guys, I don't want to touch the long side of Aussie anymore. The trade, if you guys took it, was for the long into 72. I hope you booked some there. The prudent move would have been to go break even on this 72 stretch, and you probably would have gone take out on this pullback. From here, we have to reassess, right? What does this mean? Is this headline changing our opinion on the price action? No. But you know what is changing our opinion on price action? What price is doing. And right now, as it stands, price is poised to mark an outside day reversal off of this key resistance region that we talked about yesterday. And here's what it looks like on the daily. Okay, whoop. So it's not the headline that's changing my opinion. It's the fact of what price just did. Okay. Not only did we take out a new high for the week, but we made an outside daily reversal. If things close at this level, off resistance, which broke the weekly opening range lows. That's not something I'm going to mess around with trying to fade. So we're going to go ahead and go neutral on Aussie here. You don't want to start pressing it. 72 failed. That was the level to beat. And at this point, we kind of need to let things settle. On the weekly chart rather, excuse me. The one thing I do want to highlight is this chart that we've been watching for a while. Remember this? This is my issue with getting aggressive on the Aussie. I really wanted to see 72 give out because that would have given us clear range, at least for a rally to the high week close. And that's, a basic trend line that would have given us a breakout. The failure here, and if the weekly close materializes below this slope, that's bearish, guys. That would suggest that Aussie has another stab at the lows. So I'm kind of really torn on doing anything here aggressive with the Aussie. I want to take a side seat on this one. I was miffed at the drop after looking at the data. So happy I closed on both pairs. Where did you access the port report? It was on the Bloomberg terminal when I woke up. I just scanned the headlines real quick, Robert. If you go to Daily FX, actually, interestingly enough, they actually got something interesting on there today. I think Martin wrote something about it, but it was in the headlines on some of the financial publications. Subtle. Yeah, it's a subtle headline. It's not something that's hitting like, CNBC or it's not on Bloomberg on the top headline right now, but certainly in overnight, it definitely fueled this massive drop in Aussie at least. So listen, the implications are huge here for price. To hell with the noise and the headlines. I'll tell you what'll change my mind though. If we recover and close today's session above weekly open resistance at 71.33, I'd be looking at reposition on the long side. That's my stipulation. Okay, if all this noise kind of clears out, U.S. session, Europe closes, and Aussie grinds higher, a daily close above 71.33 would have me looking for long exposure again. That said, I do think that this thing is kind of flirting sideways here. The outside reversal doesn't bode well for the bulls, and if resistance holds into this region, I would expect another stab at the yearly open, and that's all the way down at 70.40. So caution on Aussie, red alert. Any questions on this? Pooja says, so now your bias is lower in Aussie. We are looking for resistance levels to short, considering that we broke the February 19th Feb low. Yes. So one thing I'll tell you is this, Pooja. Um, I don't, what's the word I want to say? I don't want to count this as a break. There are guys, I don't want to get into a side stream, but for me, a break of a weekly or a monthly opening range low or something like that, there needs to be follow through. So the fact that we kind of dribbled below the 618 held and now we're recovering, I don't want to say that's a break. What's making me bearish, Pooja, is the reversal off 72, the way it happened, the fact that we're posting a daily outside reversal off of daily resistance, and we're failing at the 100-day moving average. Like everything here is basically showing resistance, tap, and move off. So I don't want to say I'm necessarily, I want to short Pooja because of that break. But if we hold this slope, or specifically if we fail back at the weekly open, yeah, I think the next move would be lower. You have to look for a little bit more of a dribble lower. All things held constant, I'm kind of neutral here. I don't have anything on this right now. Pooja says, okay, got it. Right on. So that's Aussie. Aussie dollar now, yuck, says Kieran. Yeah, I would have to agree. It was a spectacular move into 72, but post that, as soon as this median line broke, that's something's going on there. Remember, a breach of an upslope resistance would likely be, or oftentimes is, the sharpest part of the rally. So the fact that we couldn't even make a 2-hour close, was that even an hourly close? I think we did get the hourly close. Yeah, we did get an hourly close. But the fact that we spiked so abruptly lower from that level, you have to pay attention to something like that. And then the addition of that headline, well, that's just, pouring gasoline on it. So cautiously looking lower here in Aussie. That's number 2. Number 3, it's been a long time since I've covered dollar yen on the intraday charts. And by the way, guys, it's the last webinar of the week. So really quick, watch the weekly close here and how we close in relation to not only the low we close, but that slope. Again, closing below this would bode, it'd bode well for the bears at that point. Next one was dollar yen. So you might have noticed on dollar yen, I don't even have a link to the previous one because I couldn't even find my previous update. It was pre-December, so I'm not going to link back to a 4-year-old update. But remember, my weekly charts, my daily charts got deleted, so all the daily charts are kind of fresh look here. And I was looking at this yesterday, and it looked pretty interesting. So the weekly chart doesn't really have much in it. The only level I'm highlighting here is 1120. And what's 1120? It's the reversal, the daily reversal that we made when we broke. Let me bring this into, by the way, a log scale, because we're working with a larger range here. It kind of gets the slope a little bit more accurate. But it was the breakdown of that up channel. Okay, so the reversal day close gave you 1120. That's exactly where we peaked out last week. That's the near-term resistance on a weekly basis. Weekly support is right at the 2019 open, and that's 109.70. Okay, it's essentially where we opened the year. Levels just to keep in mind on the weekly chart, right? No change to any of the levels that we highlighted in the report. Daily chart highlighted this near-term slope. And what was interesting about this is that you had the 200-day moving average and the 100-day moving average both converging on the upper parallel here. So for me, ideal scenario on the daily chart, if this thing spikes high into this region, look to fade it. But ultimately, we're looking just for a move back towards slope support. Nothing major, nothing fancy, just for a move towards support. Here's the daily chart now. Okay, no change to any of those levels, right? Both levels of interest on the upside, kind of holding a mid-range here, but a decent pivot in price nonetheless if you just look at the crosshair to the left there. Intraday is what we were looking at. And this is a different slope. I'll bring your attention just to the fact that we're using a little bit of a different slope here with this pitchfork, but this was highlighting an interesting level at 1098, essentially 111. And that level is the 100% extension from the advance off the lows and this upper parallel. Now you might be thinking to yourself, well, we broke that upper parallel last week, and this goes back to what we were talking about, Pooja, with Aussie, right? The fact that this broke higher, this spent much more time above the upper parallel. but we essentially straddled that 100% extension, pulled lower, and a weekly close didn't materialize anywhere above that. So I still will continue to respect that slope, right? The median line was nice support, 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 support. Once we broke the 50 line was nice support, support. Here we are again. Risk is lower, sub 111. Near-term support, obviously I have that slope there, but weekly open support comes in at 110.45. Here's the level I'm looking for with a lot more interest. If we drop towards 110.12, I want to see a reaction there. You might stretch that just a little bit higher to include this high, so like 110.16. But a decent level in not only a very nice pivot in price. Again, look on the crosshair here to the left, right? Really nice area of support. The breakdown, again, a point of acceleration that converges on the median line, and a 38.2 of this basic advance from the late January low. So you're looking at like 110.12, 110.15. That's the level I'm looking for. I know Jamie's looking deeper for a cut into the 109s, and I think you get it, okay? But the first thing for me is kind of I need to see more of an assertive move below 110.12, 110.16 here. All right. Trade approach with caution, trade at your own risk. It's dollar yen. I'm not a big fan of this pair, but hey, when the levels are this clear, it's kind of, if we get a rally, shorts against this high, look for exhaustion. If we get a break below this level, that's the reaction. Look for 110.12, 110.16. Any questions on dollar yen? That is number 3. I'm going break even on a break below 110.55, even though I took it as a swing trade. Yeah, that would be a good way to play it, Pooja. I would say that. If you get, 110.45 is what I have as, what are you looking at, 110.55? What are you looking at the low that we just made? And that slope might be a good area to put the stop. For me, a weekly open tap, if you have a decent position on there, Pooja, something to peel something off there, and then go break even. Like I always say, I'm not a really big fan of going break even. I do it sometimes, but typically whenever I go break even, I like to take something off on the trade. So if it does come back, I don't want to take a flat loss. I was right on the direction. I'm going to put something in my pocket on that if I'm going to go break even on the rest. Just my opinion. My entry was 110.70. Okay, so you're pretty close. Yeah, watch 110.45 on the break, and then, like I said, this is a sweet spot for me. I want to see something happen here. If it's going to break, it should accelerate, like really drop. Otherwise, if we sit on it like something like this, it might be an area which is going to be bigger support than we expect. Also, bear with me one sec. I just want to see what this looks like. No, nothing yet. Okay, questions on dollar yen. Kieran says, I'm in dollar yen off 110.75, even better. It's been quite lackluster, but this afternoon getting a bit more energized. Yeah, and as U.S. markets come online, you'll start to see, I think, a little bit more action in dollar yen, or just yen in general. But this is what dollar yen does. Guys, I don't hate on dollar yen for, for no reason. This is the kind of price action you get. It'll sit here for a while. When it makes the move, it's going to just rip, and then it goes into stall mode again. But this thing is notorious. Stalling, 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 dump, fakes out. Everyone's getting bearish as hell. You get an outside day reverse or outside candle reversal off the lows. Boom, thing rips. It's just you have to be in it. And patience is the name of the game. Put your stop, put your limit, and let it play out. Kieran says, yeah, dollar yen, I don't generally trade it. I mean, me neither, Kieran. I don't want to say I don't generally trade it, but it's not something I trade often. I tend to respect it a lot more because, like you guys know, early in my career, this thing took thousands and thousands and thousands of dollars from me. But if the setup is there, we want to stay objective. Don't let emotions play into it. If you see price action speaking to you, take it. Make sure you're good on the risk management front, and let it play out. All things held constant, put a pistol to my head. I want to see dollar yen lower. All right. The other update was crude, but let me jump into euro and CAD first, and then we'll come back to the commodities because I want to cover crude and gold. So here's euro number 4 from the previous day's update. This thing, again, looks pretty darn good. I got no problems with it so far. The advance looks pretty decent. Stalling out for sure, but still well above the 113 handle, and that's our focus there. So here's what the euro looked like. We were talking about the fact that we broke this slope. Slope caught the lower parallel here. The break wanted to keep things 1337 support. We kind of rode this parallel a little lower. 113 is our line in the sand still, okay? The major resistance target that we haven't quite hit, 1375. Okay, we turned just ahead of it yesterday, which is kind of annoying, but that's a really nice confluence. It's the 50% retracement of the January decline, okay, from that late January high, and it's the 100% extension from the advance off the low. So 2 equal legs gives you that confluence there. 1375. The big region of resistance is 114. So this I want to trade like a pivot. If I'm long and I'm holding something into this, maybe take a little bit off, but you want to bring your stops up at that point. But this is the big level. Okay, 114. You have the 100-day moving average there. You have the 618 retracement of this recent drop. Okay, and on the near-term front, you have just basic parallel support. Take a parallel of that low, extend it to the highs, 1 touch, 2 touch, 3 touch. Both of those converge over the next 24 hours right there. So that's your top side pivot if it breaks 1375, but 1375 is still, unfortunately, resistance. Supports 1321. That's the outside, or not the outside, but the reversal, 2-hour reversal. I think it was also the 4-hour reversal, which is why I put it there, or the 4-hour high close. But just a decent pivot in price. Okay, 1321, it's exactly what we called last night. Bullish inval, or what would turn me bearish, is still, you named it, 113. It's kind of crazy. I feel like I'm just saying the same thing over and over again every day, but 113 is just the line in the sand. It's been the line in the sand for euro for months. Here's the weekly chart. Here's 113. Okay, last week was the first week we closed below 113. Guess what it was? 112.90. Right, so going back again, Pooja, to the example we just talked about in Aussie, do we count that as a close? 10 pips below? Specifically because the fact that we opened the week and then we popped right back above, probably don't want to say that we broke 113 just yet. So all things held constant, I'm looking for a stretch into 1375. That's where I want to see a reaction. A pop above keeps your focus on 114. I'm hoping your objectivity outlook seeps into my mind, says Kieran. Cheers, Kieran. It's all about objectivity, man. It's not easy to strip out emotion, but that's kind of what we aim to do here for you. We're focused on price action. And that's why when you follow the news headlines or you try to get too close to what's happening in the media kind of reports, you get lost, right? Hey, I told you last week we will close at 113. 10 pips is not too bad, says Pooja. True. I have to give it to you, Pooja. You did say that. Yesterday was a reversal lower on the daily. Please comment. Ty, on which one? On what pair? On euro? So it was a reversal candle, right, Ty? So here's the thing. If this is an exhaustion, so I'm assuming that you're suggesting that you're concerned that this is exhaustion here, right, off the 50% retracement or just ahead of. Could be. But the only way I play these, Ty, and the why this makes further sense for what our setup looks like now, is if this is an exhaustion candle, then the price should fail ahead of this high. You're rarely going to make a pin bar sort of exhaustion, breach the high, and then fail again. Right, Ty? So act as if this essential candle that we made yesterday, treat this as an opening range in and of itself, which means, again, the highs are 1371, right below this 1375 level, a level we're watching anyway. And the lows for yesterday are at 1321, the level we were watching anyway as support. So Ty, for near-term guidance, like moving over the next 24 hours, the focus is on a range break essentially of yesterday's candle. If your concern is the pin bar or the long wick or what you see there on the daily. Does that make sense, Ty? I try to take those facts and those developments Apparently Murphy had some FX laws too, says Pooja. Ty says yes. So that's how I take those developments in candlestick formations. I don't ignore them. And with the same respect, by no means do I see a candlestick formation and take a trade based on it. You're right. That is a bearish development. All things held constant, if I strip out today's candle and I see a stretch like that on a daily candle, I think, might be looking at exhaustion. But because of where we are in near-term price, we broke slope resistance, tested it as support, and because we're still in this upslope, I have to stay objective to what's going on in price. If we clear yesterday's range, break above 1375, that's resumption. If we were to fail right here, well, you know the downside targets. Look for 1372, or excuse me, 1337, a little dyslexic, and then right down into that low day close at 113. Okay, but don't let one candle on a daily close like that change objectively what's happening in your opinion and price. Robert says, touche, Pooja. Love the camaraderie, guys. Right on. All right, so any questions in Euro? Moving off from here. That's number 4. I was on the short side of Euro yesterday, to be honest with you guys. On the back of that, on the back of the FOMC minutes release, this stab into 1375 when it started to fail, I think I jumped in at 1360. I threw a stop against a high. I peeled off 50% down here, and then I went break even with a limit down at 1320, and I almost got stopped out on this rally into 1352. I was watching it, lucked out, right, and then we're out of the rest. So the rebound, I'm not in the long side. I wish I was an overnight. If I was awake during this European session, this was an opportunity to get back in the long side against those slope lows. If you are holding that, like I said, 1375 is really the level you need to clear. If you fail ahead of that, it'd be pretty concerning. One other thing I'll note to both of your comments for the bulls and the bears here on the euro is Ty, if price tops 1375 today, that would be sort of, like a pin needle or a doji, not even a doji, it's not a true doji, but a long wick. Then you would have an outside reversal candle higher, right? That would sort of refute that bearish development I saw yesterday. So there's a lot to look at today as far as price action close for euro. All right, CAD. So no change. Maybe buying a 3-month call and put on your dollar will make some money. It's one way to play it. Sorry about that, guys. Dollar CAD. So no change to any of the euro levels. Again, we held support, essentially still looking for that move on 1375. Dollar CAD was the other update. So this one got deeper than I had expected. We were looking lower. Bearish invalidation was 3282. You guys remember the previous day that we noted 3280 rather. I keep saying 3280, and then it rallied right into 1381 and ripped off. 32 is support. We were looking for the break there. The big region for me was 3166, 3170. I didn't get the reaction I thought I was going to get. I thought this was going to be, first of all, any shorts you were taking, this was the last sort of call on that one. But if we were going to break, I would have expected to see acceleration. If we were going to rebound, I would have expected to see more of a V type of move. These are my favorite Fibonacci confluences. 618 off the low, 100 off the high, typically major pivots in price. Here's what happened. You broke below it, then you rebounded right back above it, tried to hit 32, failed, and moved right back. There were so many plays here you could play on both sides. We were obviously liking the short side all the way down to this region. Limits would have gotten cleared out there. On the rebound, if you played the long side, you got to stretch right into the underbelly of former support, now resistance. And then this was another opportunity overnight to play a short back into 3172, 3160. This is still the support zone, and we're sitting there now. My point being, from this level, be careful. I could see this thing kind of dropping for the 200 clip, 200-day moving average. Here's what it looks like on a daily chart. Really nice spot. Longer term slope and the monthly open are right here, 31.20 and 31.40. 31.43, 31.23. Okay, so it's like, you know what I mean? It's kind of like the euro. You could still see that like last extension spike higher, then a pullback. Same thing here in dollar CAD. I wouldn't be surprised if this spikes lower to this region, but shows a larger recovery afterwards. So trade or look for opportunities here into the US Open if we clear below 31.66. Wouldn't go chasing any shorts from here, but if we drop into this level, I'd be looking for a near-term exhaustion off one of these two reference points. Ideally, the 200-day moving average, but even on a deeper stretch, 31.20, just for recovery, guys. Ultimately, dollar CAD, don't forget the larger picture. Here's the weekly chart. Ultimately, dollar CAD, I want to see 30.50 on this thing. Okay, remember the 200-week moving average, the 52-week moving average. Let me take out a log scale. Sorry about that. Converge down here. I guess the 52-week is coming up a little higher now, near 30.90. But so much is loaded up here. Multi-year range Fibonacci, basic slope support from 2018 lows. And again, both of those moving averages all converge down here. So, you know what I mean? I want to see it lower. I think on initial stretch into this region, you risk some sort of recovery. Ultimately, we want to see dollar CAD lower. Okay, we like the lower or the underbelly downside of dollar CAD while below. Essentially, the weekly open is bearish invalidation, guys, 32.50. But you know, if we break higher, look for resistance along that 100-day. Let me just make sure that 100-day is on point still. A little bit higher at this point. 32, 37 or so. All right, and on the downside, this is sort of your two key levels to watch. Okay, anything sub 31.20 monthly open, anything below this would suggest that a more important high is in. Okay, you're looking at 30.50. Questions on dollar CAD? On the daily chart, I'm looking at 30.96, 127.20 level, 30.50. Daily chart. What do you have at 30.96? Sort of the low close. So even that, the low close for the month, for the year, comes in at 30.99. So I mean, listen, that would be a target on a scalp or on a, if you're in a shoot or you're in a trade on the short side, that would be a level I would like peel a little off maybe. But for me, the big zone is here. And again, watch, guys. Remember, this is why the multi-time frame analysis is so critical to my trading. This slope is what's deriving the angle, or this pitchfork is what's deriving the slope rather. This line in red is just a parallel, guys. And look, when I extended it off the low from 2018, it caught the low in October, it caught the low last month, and that converges on the monthly open. So man, if we get through this 31.22 level, I really do think you probably see acceleration. Kelly, just my humble opinion. When you say you want to see dollar CAD lower, 32.50, does that mean you are bearish? Yeah, Marco. That means if I had to take a longer term swing trade, I'd rather be on the short side. That doesn't mean I won't take a long. I'm a short term trader, Marco. Okay, so if I see this thing come into support this morning and I see price action whip down into here and all of a sudden it starts to recover, I'll take a long, right? But I ultimately want to see that drop, yeah, towards 30.50 on the longer term chart. So even if I were to take a long on that, I'd only be playing a rebound, a scalp in price. Ultimately, if I miss that rebound, I'm looking for that rebound to get me a better short position to see that drop lower near 30.50. It gives you reference, Marco. He says clear, right on. It gives you reference. I always tell you that, my broader opinion and what I can do in the near term, just like in Euro, right? I'm bullish Euro. I told you the guys that day, all day yesterday, but yesterday I was in a short because there was an opportunity there. Another reason why, guys, I don't like, for my style of trading, I can't give trade by trade guidance because I'll flip flop all day. And that's one of the main things with intraday trading, guys. You can't get married to a bias. You have to be willing to go long just as much as you're willing to go short based on what price action is saying. With that knowledge, though, if you find yourself in a great position or you find yourself at a great entry and euro pulled back and you know that the broader picture for us is bullish, the reason I tell you that is because on these pullbacks, maybe on the long side, you trade a little bit larger of a position size because that is the broader trade, right? So it makes a difference what your longer term opinion is. And mostly that finds itself manifesting in the trade size that you're using, not so much whether you're willing to go long or short. Hope I didn't confuse anyone. Great conversation. Marco says clear. Robert says nice on the slopes, man, perfection. Can see now why I got wiped out on the 19th. Robert, were you just talking about dollar CAD? He says yeah. Okay, cool. Yeah, right. Robert, that's why I provide you with the and just a quick reminder. I see a couple of new names. I always do here, but just a quick reminder, guys, on the intraday page as it pertains to my analysis, if you don't see the weekly and daily chart, it's always going to be one click away. So if you see a charts, for example, on this one where it's just the daily, one click away in the previous chart, and you'll see, the updated daily and weekly charts. That's across the board. I alternate, so you always have a picture. And Rob, just keep that in mind. I don't blame you for that 18th drop because, man, it was a fake out, straight up. Straight up. I always tell you, these are my favorite levels. So when they started to break down and then stopped here, it should have been a tell that it was going to reverse, but there was nothing for me to do because that was the last sort of target on the way down. I thought you were going to get a bigger rebound there. It faked everyone out, then gave us the rebound. From here, same thing. Support structures on the longer term are a little bit lower from here. Watch for a reaction down there. All right, let's move on. I guess Kiwi real quick, and then we'll jump into the commodities. 6, I haven't done anything on Kiwi. It's, yesterday, what I tell you guys, I liked the long side of Aussie more so than the long side of Kiwi. Obviously, the news and overnight and the breakdown changes things, but it just goes to show you that Kiwi actually was a decent short. So that pitchfork that we added early in the week, here's what it looked like on the Monday update. Ended up holding. Same pitchfork, guys. We dropped into that 38.2. Fake out again. 19th was a fake out day, seems like across the board. And then here's the rally failing at the upper parallel. We sat there for a while. We pushed off it again yesterday. Here's price right back at the median line. Man, this thing is like ping pong. Play the formations, guys. We work so hard to identify these slopes that when you see something manifesting like this, it is a clear, definitive slope formation. Here's the 50 line. Support bounce, rebound, break, acceleration, resistance. Break, acceleration, support. Messy disaster yesterday with all the noise. Here's the lower parallel. So if I take a slope parallel of this gradient, and attach it to these lows, look what happens. Boom, boom. Don't get faked out if this thing drops lower. You have upslope support and downslope support. It comes in right around 68. Big whoop, right? Yeah, big figure too. Everyone's watching big figures. Well, now there's a reason to, right? So watch this region. Yeah, it's Kiwi. I have. Let me put it this way: if we clear 67.86, I'm all aboard on trying to get aggressive on the shorts. Taking a short from here, my humble opinion, it's kind of risky. You're at the weekly lows. You're at slope support. If anything, this thing might come right back into the slope, find a little bit of a recovery, bounce. At that point, you would look for resistance around the 50 line for a reassumption lower. Kiwi on the bigger picture, daily chart is not the cleanest picture. The weekly chart for Kiwi, here's what that looks like. It's in a consolidation range, guys. Plain and simple. You're making higher lows, you're making lower highs. Don't get too opinionated on this thing until we get a larger definitive break of the range. That said, the near-term slope looks pretty darn clean. Any questions on New Zealand dollar? That is number 6. All right, let's take a quick segue here to some of the commodities, and we'll hit SPX here for Pete as well. Here's crude. I wanted to give you an update on this because I think it's falling by the wayside as far as like all the news and the media, and it's definitely very interesting levels here. So the breakout is essentially coming into the first areas of where I think you could see some resistance. Ultimately, I think you're still looking higher in crude. It's a very clean trade from the weekly chart. This is what we highlighted. We've been following. Don't stress the slope on this. Here's the weekly again. Don't stress the slope per se on this pitchfork, more so the play that you're seeing here, right? We talked about this yesterday, so I don't want to go over this again, but support, median line, a little bit deeper of a cut, right? But the big resistance range is 59.16 to 60. That's ultimately what the target is on the long side. Near term, you might be coming into some problems, okay? That slope is a little bit higher on the weekly chart, 58.50s, okay? But 59.60, just remember that into 60, this 40-cent range is massive, massively important, okay? That's the weekly chart. Daily looks like this. Now, a new slope that we had added, we had to redo our daily charts, as I noted yesterday, looks like this. This is the 75% line of the slope. Why? Again, very similar to the other setup that we had looked at earlier. The 75% line on the underside caught the lows. Here's the break and the move higher. Still think you can get into 58.10. 58.10 is the swing low that you made February of last year, so it even has some nice symmetry in time. But that's kind of where I want to see some sort of larger reaction. If we're going to fail, you're going to see some sort of pullback, some sort of relief for the dollar, some sort of correction for crude. This would be the region to look. Support 55.50, bullish inval 54.80. Okay, that's the high day reversal close for the February open, and converges on this slope. I know we've broken this twice, but if you look at this in near-term price, you've actually seen pivots on both sides, and it converges on the downslope of that 75% line. So bullish inval, ideal support 55.53, big resistance 58.10. That's the level we need to clear on the upside. And again, 60 is the major target. That's what we want to see ultimately on the crude rally. So here's what it looks like on the intraday. I don't have too much on this chart, but I just wanted to give you guys kind of a quick look at what we're looking at here. If you guys recall, I removed this pitchfork yesterday because I just wanted to keep the charts clean. But if you guys recall the previous update, and again, the link is always provided for you. There it is. We were looking at this pitchfork. We were coming off pitchfork support. Said bearish invalidation was 53. If we cleared 53, you're looking for resumption. Well, there's 50. There was a 53 break right here. Look at my cursor. We accelerated, tested 53 support, broke the upside of this pitchfork, and here's the stretch. 58.10 was the ideal scenario, but just to look at this, guys, from what's been happening overnight, this could be a raised ceiling. It's basically a sign of exhaustion that you're turning ahead of slope resistance. So if you break below this parallel, stay aside. Don't get cute and try to buy that. At this point, I think I would expect to see a larger correction. You've been getting divergence since the start of the week with the subsequent highs in price, a subsequent low in the oscillator. Exhaustion could be there. 58.10 resistance, 55.50 support, 54.80 bullish inval. Questions on crude? Number 8, gold. Somehow the phrase "I told you so" just doesn't do it, does it? 1348, didn't quite get the clip into it. Talked about the risk about 1448, 1450 for a while. That 1448, by the way, is the high day close for 2018. 1342 rather was the 88.6. So the daily chart was a little bit more accurate on calling this high on the third reference point of divergence in price. Here's the pullback. Same story, different asset, okay? It's stretched into trend resistance. No one's saying that the trend is going to reverse, but certainly the immediate uptrend is at risk below 1348, 1350. No change there. So ultimately, we do want to buy a bigger pullback in gold. Look for support. The major support level is still going to be 1321, that same level. Okay, on the intraday, you might find support a little bit ahead of that. 1330 would be a 236. But if we break this slope, I think you get a larger pullback. This is monthly open support. Okay, big level of resistance, 786. Would be a nice area to find some support again for another vault higher. But just know that the risk is more for a setback here in gold, I think, well below 1348, 1350. Kieran, what do you got at 1318? He says, I was looking at 1318. What are you looking at 1318? You got something there? So there's a couple of different ways that you might be deriving that 1318. This is just a slow parallel of that same gradient. It's 1330. Yeah, Kieran, that's what I'm asking. You say support for gold. What level do you have showing up at 1318? Oh, he says you've got 1319. So the 1319 I have is, again, none of the level, guys, every level I derive is based off of some quantifiable metric. It's nothing, unless it's slope, right? Slope is the only thing that ends up being a little bit more subjective. But this is a basic 236, or excuse me, a 38.2 of the entire advance of the January low, from the late January low. So this whole move, right? A basic 38.2 of that gives you 1319. So before you try to play anything on the short side of gold, guys, just as a side note, I always look. Let me take a step back. If we're going to play a break of near-term upslope resistance in a trade that we're super bullish like this one, and we want to play the downside, the way you would play that, guys, is either the break below 1330 and the recovery back. I want to see slope find resistance. That high should give us structure, and that's why you always find me, pointing out embedded trends within the larger one, right? So within this downtrend, before we started to play the upside, I wanted to see structure. And once we added that pitchfork, we started to see, oh, parallel resistance. Oh, turn ahead of support, right? So the same thing, on that gold trade, right? Before I start playing downside, if we were to rebound here and get another high, maybe you get a pitchfork, maybe you get some slope, maybe you get a channel, and that'll give you a little bit more conviction on how to play the approach lower. Make sense? Last but not least, Pete, for you, here's SPX, man. Where it turned was ridiculous. Look at this thing. I like the short side. You've had ongoing divergence. You never want to be the guy sort of calling the high per se, but Pete, if it's gonna turn, this is a sure damn good spot. And you know what? Those headlines, man, it's only going to help your position, right? So look, I wouldn't, again, don't get super aggressive. It's not something you want to start betting the farm on, but certainly a nice area of resistance. Remember yesterday we were talking in the webinar, this thing was sort of ranging just below this parallel. What a tag and what a rejection. So I do think you have a little bit of a pullback here. Things to pay attention to here on this one, Pete. If you get an outside day reversal off of these levels, that would bode well for the downside as well. First major level of support, I'd be looking for a drop just in 200-day moving average. That could be as deep as 2750. So take it for what it's worth. Watch for that outside day reversal and watch for a daily close in the momentum oscillator back below 70. Again, that would be your first sort of rejection of 70 and the first pull and close below 70 that you've gotten in quite some time. Okay, that's all I've got. If you have any other questions, hey, Peter, you're more than welcome, sir. I appreciate that. If there are any other questions or trade setups, feel free to throw them on the message board now. Otherwise, I will bid you guys farewell. Have a great weekend. Thank you so much, Robert. I appreciate that. Have a great weekend, guys, and I will see you on Monday morning on Daily FX for the weekly strategy webinar on the public site, and then right back here on SB on Tuesday and Thursday. Best of luck trading. Crude, you mentioned 5650 also? Oh, no. The level 5650? No. It's 5550 support, 5810 on the upside is resistance. The big level I think you might be thinking about is that weekly resistance, which is 5960 into 60. It's a 40 pip, 40-cent range of resistance. Kieran, does that make sense? Yeah, you got it. All right, guys, have a great trading day, and I will see you on Monday. Cheers.